What is going on? Welcome back to the portfolio. Welcome back to the channel. Great to have everyone back on the YouTube series, back on the Robinhood portfolio. For today's video, I want to do a quick update on the portfolio, let you guys know exactly what's been going on over the last couple days of trading. As you can see here up on screen, not a great day of trading, down 2.7% in the red, 11,905. But overall, looking to get back a lot of the gains that I lost over the past year. And you can see here now the year-to-date trading is only up 26,345, 6.53% in the green. At one point here, up almost 20%, but definitely been pulling back quite significantly. And a lot of that has to do with the failures in the banking industry. As we talked about yesterday, a very large bank in Silicon Valley, SVB. Let's go ahead and take a look at that stock today in the watch list. Where is that? Right here, SVB Financial Group, down an incredible 62.76% today. 1 week here, you can see that very large drop off. Very interesting, up on top, you can see some stock exchanges, not Robinhood. Very interesting that they phrase it that way. Have temporarily halted trading of SVP Financial Group. And a lot of that has to do with the criticism Robinhood got back with the meme stock frenzy when it halted trading. A lot of criticism for that, so it looks like they're trying to point out that they are not going to halt market trading. But it goes through, this is a nice little overview of what happens when the market moves in significant drops. You can see level 1, level 2, level 3, market-wide trading halt triggers here. They call them timeouts, and you can see dropping 7%, 13%, and 20%. They'll actually pause trading for 15 minutes. Won't let any orders go through. After that period of time, you can start doing orders again. But very interesting, very nice overview here actually. But market trading, halting trading, you can do that as a market-wide thing or individual stocks, as what happened on Robinhood prior. But a lot of these banks, especially banks with crypto exposure, have been undergoing a lot of stress recently. SIVB, SVP, Financial Group collapsing. So very interesting. And the other big thing too, if we go over to the news ticker here, a lot of what's going to be happening will depend on the federal rate hikes. Will they continue? Will they be paused? Unclear at this point. A lot of people are suggesting that they're going to pause the rate hikes. But if they do not pause the rate hikes, I don't think there's going to be a lot of optimism, at least for my portfolio moving forward here. And VOO here is a great stock, kind of gives you an idea of the overall S&P 500, what it's been doing. Throughout the entire day, down quite a bit, at one point getting down under 2%, I think, 1.89% at least, 1.94, 1.96%. Did rebound here a little bit at the end of the day trading, but overall down 0.61%, at one point almost 2% in the red. What I'm going to be doing moving forward here this next week, a lot of options trades have to be either rolled forward or closed out. You can see all the trades here up on top. Ford 1235 call, 317 expiring this week. Pfizer 42 call, Tesla 180 put sell, as well as a 172.50 put sell. And then there's a few for next week. Ford 1335 put, Ford 1285 call, and then some longer term calls here. Some of these, unfortunately, the price moved quite significantly, and I'm locked into these for quite some time. You can see I have a $40 call on Coinbase, but if we do take a look at Coinbase, it's currently at $64.84. I definitely need to figure out what I want to do with this stock moving forward. I think it has a lot of long-term potential. Again, just like SVB, it's been hit hard by the pullback in crypto prices. 52.91, 1 month, 3 months. You can see it was kind of trending up, but definitely down quite a bit over the past 1 year of trading, 57.59% in the red. So I really need to figure out what I want to do with Coinbase. I like to keep it in the portfolio. I have 500 shares, 32,420 market value, but I definitely have to get out of this call contract. I don't want to sell it off for $40 a share. That'll be a very large loss. And then Boeing as well, 160 call. Boeing is currently trading almost at 200. So again, I'll have to continue rolling this forward. You can see this is a very large position in the portfolio, 1,200 shares, 238,500. This is up 13.26% overall, but at one point this was up over 100% in the portfolio. And again, I do have a call contract 160, it's 198. Don't want to sell it off for 160. So I'll have to continue rolling forward. But if we do trade, roll position, select new contract, you can see I have to buy those contracts back up on top there at $49.20. So I'll have to go out quite a bit here. June 2024. And it's still not anywhere close to the current price of 198.80. If I want to break even, I would have to go down to 175 here. If I do go down to 175, I can sell those off for $51 plus. If I go roll, continue here, you can see 49.20 I'd buy back, and then selling off again 51.53. If I do that for all 12 contracts, I'll make $2,796, which is very good income, but again, I'll have to be holding that through June of 2024, and the price can move quite significantly in that interval. Same way with Tesla, 210 put here. Hope Tesla does rebound a bit. -4 contracts. Total return is still up just because I was rolling that forward. There's quite a bit of options income in this stock. So even if I were to buy these back, for example, if I go roll position, I'll have to buy these back for $33.88 per share. So that's quite a bit of money if I were to buy those back outright. But I can do the same thing here, roll forward. If I want to break even, again, I'll have to go out quite far into the future. Let's go all the way up on top to June 21st, 2024 as well. And even then, you can see I'll have to roll out quite significantly here to make that money back. Again, 210 put, the current price is 180.54. So I could roll out to that price point, select anything from 180 below that. But price of Tesla could pull back, it could go up. So I'm not too worried about that 210 put. Again, it's going to be a longer term hold in the portfolio. But these options up on top, I'll have to do something this week. The 12.35 call, that is looking good so far. Current price is 11.68, so I won't have to sell that stock off for 12.35. But here I could do the same thing, roll position, simply roll it to next week, and then I can kind of decide if I want to do that same 12.35. If I do that, I'll essentially sell off those 88 contracts, make 9.68. So basically 9.68 weekly income. You could also be a little bit more aggressive as well. Again, trade, roll position, buy back those contracts at 4 cents per share. Maybe I want to be a little bit more aggressive. 11.85 call. You can use the Greeks at the bottom to kind of decipher which contracts look best. Now, I definitely went over that in prior videos. I can go over that in another video as well. If I do continue here, roll position, now I'm making $2,552, and potentially that could be weekly. Again, that all depends on the price of the stock. If the price is moving significantly up and down, those contracts obviously will be a little bit more lucrative, but also a little bit more risky that the stock goes the opposite direction that you want. And these Tesla puts here as well, I have to roll these forward. 180, that's right at the money here, 180.54. So again, trade, roll position. This will be quite a lucrative contract since it's very close to that strike price. If I simply did the same price, 180, roll forward, you can see a very nice income here on the portfolio, 375. So not quite sure what I want to do moving forward here, but I think that is something that we can consider. So to recap, I'm going to have to do 4 contracts for this next week. Again, rolling all of these put contracts and call contracts forward. The 12.35 call, the 42 call with Pfizer, and those 2 put contracts, 180 and 172.50 put. So overall, let's say just go ahead and roll for the same price. For Ford, for example, roll. I could make 12.35 call, roll forward. About $1,000 for that contract. The Pfizer contract is only a few dollars, so I won't go over that one. 180 put contract here. Again, let's just roll for the same price. Moving forward for next week. 180 put contract on the bottom. You can see I'll make 375, so about 1,300 or so overall in the 2 contracts. And then that final contract, the 172.50 put sell, 2 contracts here. Roll that one forward, select new contract next week. I'll do the same price of 172.50. Actually, let's go ahead and do a little bit more aggressive. Let's do 177.50 contract. Roll forward, continue. Another $1,000 or so. So about $2,200, $2,300 per week, potentially, just with these 3 contracts here. So that's what I'm going to be doing moving forward with the portfolio here. And the options, negative numbers, these are all sell contracts. So any negative number is good for the portfolio. So that up on top, negative 42 is good. Yes, the underlying stock is decreasing in value, but at least for the options contracts, I can safely get out of that contract without any issue. So again, just wanted to quickly go over the portfolio, give you guys an update on today's trading. Again, down 2.7% in the red, 11,905. And again, moving forward with options contracts and then trying to get into some stocks. If the market does continue to pull back, getting into some value dividend stocks moving forward to hold in the longer term, in the portfolio for the longer term, and receiving that dividend income. But not to make the video too long, I'll kind of end it here. Again, if you guys enjoy the content on the video series, if you guys enjoy the channel, feel free to like, share, and subscribe. Until next video, we'll see you then.